Hi guys, welcome back to the channel. I'm your host Dr. Seema Jain. I'm a SEBI-registered research analyst. I'm not going to talk about stocks today because I expect you all to join me live from 10 to 11. And if you don't know where to join me, you can go to my channel, YouTube channel StockPro, and you will find the link for live trading tomorrow. So today I'm going to talk about something very different. I'm going to take up the concept of SEPA. It's a SEPA concept from Mark Minervini. So what he says, it simply means specific entry point analysis. And for this SEPA analysis, he gives 5 points. The first point he says is the trend. You got to see the trend. How's the trend doing? Second thing you need to see is the fundamental. How is the fundamental of the company, or how, if I talk about Nifty Bank Nifty, then fundamentals become crude price, fundamentals become dollar price, fundamentals become political news, fundamental becomes, the war scenario or inflation or Fed meeting or Fed rate hike or monetary policy, whatever, these becomes fundamentals when I talk about the broader market, which is Nifty and Bank Nifty. Then a very important factor comes in, which is called catalyst. So there is a possibility that there's going to be a trend which is developing over. There could be fundamentals which are developing over. But until a catalyst come in the market is neither going to go up nor going to fall. It's a very, very important point that to be noted. And then we need to know when to enter and when to exit, right? These are the 5 points in the SEPA analysis. Now let me take an example and explain you. If you notice here, this is, starting from 2017 December till about 24th March. Entire market, when I say market, at the moment I'm taking Nifty only. Nifty only gave a movement of about 2000 point. Only 2000 point has been moved. So what does it mean? Did people know about Corona in advance? No, nobody knew. Nobody had an idea about Corona. But there were some developments that were happening, and the fund managers were worried about their portfolio, and hence they were either hedging their portfolio or they were exiting their already holding positions. And that is what you saw in the horizontal movement. That is what you saw in the horizontal movement starting from May 2019 to about December or February 2020. So almost like 6-7 months a horizontal movement, or rather I would say starting from October 2018, almost like one year and 2-3 months horizontal movement went on. People having no idea about Corona, but still there was some dynamism in the market which probably the fund managers understood. How do they understand? So they understand because they have a research team. They have a battery of people who keep doing the research, and there are certain indicators which keep indicating. Maybe indicators, when I'm saying the economical indicators, not like the RSI or not those indicators, but like economic indicators. They have a set of parameters by which they find out how is going to be future. Now, having said that, they have been either kind of they're hedging their positions or exiting their holdings, and as an effect, what happened now? They kind of gauged that there is some wrong fundamentals developing. Then what did they do? We all waited for a catalyst. And how did the catalyst come? It came in the form of Corona. And that effect is when everybody got to know, market started falling down. So this was an entry, and now comes the exit point. So exit point is also one need to understand. If somebody's shorted the market, where do you need to exit? So this is how market worked. Now let me take you to the recent scenario. There are 3 very, very important events that happened. First one is the Ukraine war. Second is inflation. And these are 2 very important events that have happened in the year 2022. Now see, have a look at it. It's like Probably the FIIs or the institutional investors had a good idea, and hence they started exiting their positions from October onwards. When did the war happen? In February. So did they know about it? Nobody knew about it. But as I told you, there are some economic indicators which kind of guide them to hedge their portfolio or exit their positions. And as an effect, what happened? Market fell, again went up on to the same levels, and again started falling down. The trigger came in the form of Ukraine war, and that brought market down from 18,000 to 15,700, 2,000 points drop. Then market started going up, and again trigger came in the form of inflation, and again it started going down. So what I am trying to tell you here is, it's just not the technical indicators, but there are a lot of other indicators which affect the fundamentals of a company's economy. Those are very, very important. Like crude oil price, how is it going? Because why is it so important? Because we import crude oil, and when we import crude oil, we are using our foreign currency. When we are using our foreign currency, means our dependency on the foreign currency becomes bigger, higher, and dollar is going up. That means we need to spend more money. And when crude is going up, remember that anything that need to be transported, that will become expensive. For example, the groceries will become expensive, or cement will become expensive. I have made a video already that what effects will come in case rupee becomes weaker. So a lot of factors will come into play, and Fed rate hike or monetary policy, or these are all the factors which form the fundamental of our Indian economy. So we need to closely watch them, but remember that the fall doesn't come in one day. It develops over a period of time. Similarly, the move in the upward direction doesn't come in a single day. It comes after developing for some time. Let me show you up move, how it got developed and how it started moving up. See here, there was a drop here. There was a drop here. The up move developed here, formed a double bottom. After crossing 7273, it straight away went to 9,000. Almost like 30% return in few months, right? But it developed here, right here. This is a place where, the market kind of took a support, the positive sentiments got developed, and then it started moving up. Best example that I would like to show you is when the BJP government came in, how market went horizontal, for some time, and then it just took off from there, and that is how, the trigger was basically change in the government, and people expected country to do better, and hence it developed for some time, and then the rally started from 6363 to 9,000. I would request not to take it as I'm not a supporter of BJP or Congress or any other party, but take it as in a way of learning it. So in case you have learned something from this video, please give a thumbs up and write in the comment box what have you learned about it. You have to start reading finer prints about market. What are finer prints? You need to look at the economy as a broader picture. What is happening to US dollar? What is happening to crude? What is happening to Fed rate? What is happening to inflation? What is happening in general in political scenario? How are they changing? Is there any conflict or the war taking place in the world? All these factors really affect our Indian market. So make your perspective broader rather than making it very narrow. This stock and this move and this. No, make it very large perspective. Then you will be a much better investor. You will be able to take right decision at the right time. So with this, I'll be signing off and see you in the next video with new content, and see you in the live market, live trading every day from 10 to 11. All the best. Take care. See you tomorrow.